Continuing our discussion on the higher time frames and first red day, first green day, and ACB trade setups, let's keep continuing and assessing and looking at different examples of markets when they form these opportunities for traders. So going back to what we talked about in the first module of this section on higher time frames, understanding the monthly rotation, new month, new timing cycle, new week, new timing cycle, Monday, Wednesday, Friday templates. And so if we're looking for a first green day, we don't want to be trading inside of a range saying it's a first green day because it's an up closing candle or anything else. There's a specific understanding that we have a market that opens a new month, breaking a monthly level or inside. We'll look at a couple of different examples, but for the purposes of this first part, we'll look at this and we want to know that we've broken a monthly level, and we potentially may now be targeting a reversal opportunity in this particular case. So think simple. If we're going to be looking for asymmetrical risk reward, we want to be buying low and selling high. And the opposite, if we're going to be selling something, we want to be selling high and buying low. When we use that higher time frame understanding, we're aligning ourselves with all time frames ideally and increasing our odds of success, but also increasing our potential now for asymmetrical risk reward. So instead of just catching the high and catching the low, we want to be positioning ourselves in a market that now may be going on a range expansion. So instead of trying to get 1-to-1, we might be going for 5-to-1 or 10-to-1, or even getting 3-to-1 or 4-to-1, but leaving a trailer in as the higher time frame continues to trade in that direction. Now, looking at a similar example of what we just saw on that chart, we're looking at the Euro-Yen daily chart. We have a market that, as the new month begins, Monday, Tuesday gives a first green day signal. Now, in this particular case, this market traded back to close at the extreme, similar to what we just saw. Open, low, high, and close. When we go to our hourly chart and we have our low of month broken out of Monday, Tuesday, first green day, and then Wednesday trading back inside of our range, but just the understanding now that this market is potentially reversing. And when we're trading in our session, you could be trading Asia, London, or New York, aligning yourself with that thesis if indeed a trade setup presents in your trading window. So it's not just necessarily I'm going to go long. As we can see a market dumping back down, higher highs, but continuing to trade higher. Week 1, week 2, and week 3. Again, just reinforcing understanding what a real first red day and first green day opportunity looks like, and then carrying that thesis forward if indeed that market continues to provide us with that underlying higher time frame bias. The month comes to a close and we start the process again, the closing price of the month, open, low, high, and close. Now if we go back to our daily chart, understanding that when a market is now potentially reversing, that these days that are counter trend to our underlying bias are our counter trend days. 1-day counter trends, 2-day counter trends, and a continuation. And these again can be driven by news catalyst opportunities. And then we close out the month and we have potential opportunities for reversals at the extremes. First green day, first red day. When the monthly candle closes, they can all look the same, but they're going to present differently. More importantly, though, understanding that you're either inside of a monthly range or you're outside. And when a market is inside, we can still have continuations of that existing downward movement. We have a first red day signal on the inside in a new month. We have a market that's sold down and closed as a down closing month. We're inside of a monthly range. We have a market that closes in breakout on the first day of a new month. First red day signal that continues in the direction of that monthly close before breaking out and giving us a first green day. So here's the thing, understanding that we get a first green day, but that doesn't mean we get into the market. Again, allowing the trade to set up. This market could continue to break down. one-day counter trend, but we coil sideways. We have another green day. And traders will say, but it was the first green day. And again, understanding, building your muscle memory, how does price behave on the day? This market may not be done putting in the low, or it's working the low. Our lowest closing price of the month is still in place, and we get higher highs. So remembering we're following the thesis that this market may potentially offer us an explosive move. And we go to the smaller time frame in a moment, but we get our engulfment. We get our low close of the month in place, a first green day, a revisit to that monthly extreme, another green day, higher highs, and a third green day, a pin hammer, and an engulfment heading into our midpoint range of the month. A market closing in breakout in the long direction at the low of the previous month. And although we have a first red day on the inside, this is a classic example of higher highs on the inside. We have our coil sideways at the low of the month level. Breakout, coil sideways for a potential explosive move back in line with our first green day thesis after breaking out of the low of month level. As we head into our third and fourth weeks, we have an engulfing candle giving us a first red day signal. And I want traders to continue to study this because these are the same behaviors over and over again. We have our breakout pullback, and this is our break-in structure for a potentially larger move in line with higher time frame sellers from the left-hand side of our screen from the previous monthly chart. We're trading back up into higher time frame selling. Week 1, week 2, week 3, week 4, the closing range of the month, and another first red day signal as we head into the close of the month. And we have a collapse that wipes out the entire month. First green day, first red day after higher time frame levels are broken out of. If we just step back and have a bigger look, we can see that that market not only broke out of the low of June before coiling sideways, but it was trading down into a lower monthly low made back in April. Breakout, coil sideways, but our first green day understanding. When we look at our monthly chart, all we see is a market that broke down, reversed, and closed near or just off the high. Now, the point of this particular module, again, is just painting the picture of just because a market breaks out, gives us a first green day signal, doesn't mean we have to have the trade the next day. But using the higher time frame and waiting for the market on the higher time frame to confirm that we now potentially have a market that is reversing or continuing the trend. So the beginning of the month, we had a first red day. And depending on the session that traders were trading, that market may have already left the station or allowed traders an opportunity a day or two later. We have our reversal and a first green day signal. And you'll notice that not only was the first red day an inside day, but the first green day was also an inside day. Now, following that across, we have a market that starts to make higher highs, giving us the potential indication that this market may now be coiling and preparing for a reversal back in the long direction. But then going and understanding the timing, week 1, week 2, week 3, reversing and heading back in the long direction. Week 4, continuing into the extreme of the month before closing down as a first red day from the highest closing price of the month, and heading into the close of the month with a first red day ACB template at the extreme on a Tuesday, closing out the month, and the cycle starts again. Now we'll look at an example of where a market trades down, puts the low of month in place first, closing with a first green day, and resuming an existing upward move. A market that's closed in breakout in the long direction. It's closed outside of the previous monthly high. It broke out. It's closed higher. The new month starts to trade and auctions down inside. We're inside of the previous monthly range in a market that closed in breakout. And we get a market that prints a first green day signal, impacting the big picture concepts. first green day, first red day at the extremes from either the inside or the outside. We can back this chart up and do the same thing. We have a market that trades higher, closing back inside of the range. The new month starts and we have our opening price. Open, and then the market 1, 2, 3 lower closes to the low of month level. We have our first green day, closing and breakout, a consolidation and a continuation, now trading back through not only the high of the existing month, but the previous month, breaking higher, breakout, coiling on top of the breakout level before trading higher and giving us an ACB reversal into the closing range of the month. Open, low, high, close, and the process continues. Open, low, first green day. Again, you'll notice the behavior of price and engulfment. First red day, 1, 2, sideways, 3 lower closes. First green day, and the explosive move back in the long direction. As we head into the closing range of the month, we see a first red day signal and a market that continues to trade sideways into the close. And this is a strong breakout. So when traders see this first red day and they're looking for a huge reversal, remembering that we're now in a large breakout. And this may not be the high. We went through this in a previous video. The market closes out the month, closing out the month with a bullish engulfment, a higher green day candle behavior heading into the new month. We get a first green day at the beginning of the new month on top of a market that is now continuing to trade higher. First green day behavior. Now this is where I mentioned in the previous video about the higher you get, we want to be buying down low, a first green day opportunity down low. When we get them up high, this market may now potentially be heading into a more volatile area. We're buying high, 1, 2, 3 higher closes, and then of course we see the increased volatility. Point being though, new month, new timing cycle, we're inside, we're auctioning down into a breakout, or we can auction and break out of a monthly level, but we go back to that understanding of the higher time frame in that monthly cycle of what a first green day opportunity looks like in a well-engineered opportunity where we can buy low or position ourselves within that market throughout the month in our session if indeed a coil presents for a continuation trade if we're not already in that market or in that first green day opportunity. We can look at all kinds of different examples of this. We have a market that trades higher during the month before closing, and the new month opens and breaks down right away, remembering that we're inside of a monthly high and low level. The market is breaking down on the inside in a new month. Well, if the market is inside and we're looking for a signal, we need to wait for that market to consolidate or give us an indication of a potential first green day opportunity. Again, we got an inside day and a first green day indication. So remembering that the signal day doesn't mean that we just get in the next day. How does price behave in the session that you're trading? We're looking for coiled markets for potentially explosive moves. We get another pin hammer after our first green day signal, and then the explosive reversal trade, and this was a 10 a.m. We'll go down to the smaller time frame, but you'll notice that we see the explosive reversal back inside of our large bearish candle that started our month off. And of course that began the explosive continuation trade where we put our low of month in place, and potentially now we're trading back to the other side of the range. We take out the high of month level and we get our red day. Open, low, high, close. I want to revisit some simple concepts from earlier in the masterclass, but Monday was an inside day. That was our first green day. Tuesday was the first day that closed in breakout. So acknowledging that we have a Friday, Monday, Tuesday, Wednesday template. The best part of this is that on Wednesday, we have a low of day level broken after our close and breakout. This is a 1 hour chart, but we have our 10 a.m. 4 hour candle trading down to our low of day level. So breakout traders now that are getting in the market, you'll notice before they went down, they made the higher high. They trigger breakouts first. They trade down to the low of day level in our new 4-hour rotation for the reversal opportunity in line with our first green day thesis, week 2, heading into the backside of the week. And that began the trend all the way back up towards the high of month level. Go down to our 5-minute chart, we see a perfect low of day reversal in line with our first green day setup in the new 4-hour 10 a.m. candle rotation from the extreme. A beautiful first green day opportunity on the NASDAQ. Just again an example of where a market traded down first, giving us our first green day signal in line with trading back towards the high of month levels. We'll see you in the next video and continue this masterclass.